I have a belief that gold is going higher because I have a belief that in objective terms, the US dollar is going lower. I should qualify that. I still think the US dollar will likely be the strongest currency in the world, which is to say that in terms of purchasing power, it will fall less rapidly than other currencies. I believe that the gold bull market continues. In the year 2000, it was $256. Now it's $2,400. It's gone up in price 8.4% compounded for 24 years. It has been moving. It's done its job. And I think that's what investors need to pay attention to.
There's no question that 2024 will go down in history as one of the most profitable years ever for precious metal traders. Gold prices are setting new session highs above $2,400 per ounce after U.S. consumer prices cooled more than expected in June, boosting hopes for a September rate cut from the Federal Reserve. In the year 2000, gold was $256. Now it's $2,400. It has gone up in price by 8.4% compounded for 24 years. RickRule, proprietor at Rule Investment Media, mentioned that gold has done its job, and he thinks that's what investors need to pay attention to. Furthermore, RickRule believes the gold bull market continues and that silver will begin to outpace gold. In a report published Wednesday, commodity analysts at Citi said solid gold demand in the second half of the year could drive prices as high as $2,600 an ounce, with investors playing catch-up with the broader marketplace. In gold bulls, we can't ignore silver. 2024 has been positive for silver stocks, as silver prices soared during the second quarter of 2024, breaching the $30 mark in May for the first time since 2012. According to the Silver Institute, demand for the metal is set to outstrip mining supply for the third year in a row, due in part to rising demand from sectors dependent on the energy transition, including photovoltaics and electric vehicles. While RickRule believes the gold bull market continues and that silver will begin to outpace gold, he added, "We're coming into the time in the gold bull market where silver begins to outpace gold. All other things being equal, you may see an increasing number of silver juniors here." This conversation is rich with actionable insights and perspectives that are essential for anyone interested in the commodities and mining sectors. Before we jump into more content, consider subscribing and enabling notifications to stay updated with our latest uploads.
In the year 2000, it was $256. Now it's $2,400. It's gone up in price 8.4% compounded for 24 years. It has been moving. It's done its job. And I think that's what investors need to pay attention to. I would argue that the cost of capital isn't expensive. I would argue that the mining industry is over, not underfunded.
Interesting.
I would argue that of the 3,000 junior companies in the world, listed around the world, not just Canada, probably 450 are viable. Therefore, 2,450 are unviable. The fact that they can raise capital at any price means that capital is too broadly available. I have found, despite this alleged capital shortage, I've probably participated in 35 financings in the last 2 years. 28, 29 were oversubscribed and I got cut back. So for high quality companies, for good people, capital's very, very, very available. I'm going to offend perhaps some of your advertisers, but for the lame, the halt, and the blind, capital shouldn't be available.
Yeah, that's an interesting way of putting it, to say the least. Okay, talk to me then about the strategy going forward in terms of what you're going to be doing here next year at the show.
Well, the exhibitors here are always companies that are in my portfolio. We don't let somebody on the floor of this conference in a public company if we don't own them. Sadly, there's no guarantee that because I own it, the share price goes up. But there is a guarantee that the process is honest. Coming into the time in the gold bull market where silver begins to outpace gold. So all other things being equal, you may see an increasing number, as an example, of silver juniors here. But I really believe that size is what matters. So what you're likely to see here, as opposed to other conferences, is very large deposits in commodities that may not be in favor at this conference. Deposits where the value of recoverable reserves and resources exceeds $20 billion. It might be that there be rutile or graphite or copper or zinc, but the overall theme is that size matters. What you'll see at my conference too is that I have a different view of political risk than most people. I believe every jurisdiction is lousy, that there are no good jurisdictions. I would rather have a great deposit in a tier 3 country than a tier 3 deposit in what is perceived to be a great country. So you will see more geographic dispersal, and you'll see more frontier and emerging markets represented.
After gold and silver, rare earth metals are the hot topic. Discovered in the late 1700s, they are called rare because at the time no one had seen them before, and earths because they were characterized as non-ferrous metals, simply earths. China tops the list of countries when measured by the volume of production of rare earth metals, producing in 2023 more than 2/3 of the global rare earth mine output. In a distant second place was the United States, accounting for 12%, followed by Myanmar, which produced 11%. Currently a minor player in the rare earth market, African mines have the potential to supply almost 10% of the world's rare earth elements by 2029, thereby introducing alternative suppliers into a market currently dominated by China. According to RickRule, rare earths are beginning to be understood in a geopolitical context. He said, "We haven't looked for rare earths because for 30 years they're not rare." Let's now turn our attention to the video again.
Rare earths seem to be beginning to be understood in a geopolitical context. We haven't looked for rare earths because for 30 years. They're not rare. We haven't looked for them because the Chinese have produced them so efficiently and cheaply that nobody could compete with them. Two things on that. The first is that there does seem to be some discussion of geopolitical rather than economic allocation of rare earths. So there are implications for companies in supply chains that don't include China around rare earths. But the second thing is that the Chinese efficiency in rare earths has come with devastating environmental consequences in far western China. And the Chinese themselves are no longer willing to tolerate that. So the price of rare earths is going to increase not merely because of geopolitical competition, but rather because the Chinese are beginning to employ Western environmental standards in the extraction of rare earths. And that's the game changer that most people don't recognize. Governments are absolutely noticing, and rare earths aren't rare. Any place that you have old Archean rocks, read Northern Canada, pegmatites. We know the geological environments that rare earths exist in. We haven't looked for them because they are too cheap. That's over. I mean, that's over. We have, at this conference, Meteoric Resources, an Australian listed junior, with an enormous rare earths discovery in Brazil. This isn't the last. People need to understand with rare earths, you need to know about the composition, that is to say, which of the rare earth elements you have, and you need to learn about the metallurgy and extraction, which is devilishly difficult. But there are some truisms across deposits irrespective of commodity, which is to say that bigger is better and grade is king. Understand those. Worry less, I would say, about where gigantic deposits are and worry more about getting gigantic deposits in your portfolio. If the price of something that you don't have any of goes up, it shouldn't matter much to the intrinsic value of your investment. You have to ground people in reality. I think the other thing is that what you are interested in is shaped by the macro, but how you make money is shaped by the micro. You make money at the firm level. You don't make money with big predictions. The second thing about that your audience really needs to understand is if you are making an investment based on a long-term trend, don't have a short-term strategy. If you think that the copper price could double in 5 years, don't have a 3-week outlook. Don't have a 3-month outlook. Don't have trauma holding a copper stock over a long weekend.
While the gold market remains well supported by demand from the central bank, Citi also expects to see further growth among retail consumers and investors. We remain constructive on gold physical uptake over the next 12 months, with a potential Fed cutting cycle and U.S. labor market headwinds buttressing paper demand for the yellow metal, the Citi analysts wrote. In this environment, the bank sees gold prices trading between $2,800 and $3,000 per ounce by mid-2025, while the silver demand exceeded supply in 2023, resulting in a structural market deficit of over 142 million ounces. The forecast indicates that the annual production shortfall will nearly double to 265 million ounces by the end of 2024 due to surging industrial demand. Will 2024 go down in history as one of the most profitable years ever for precious metals? We want to hear from you. Feel free to leave your thoughts in the comments, give a thumbs up if you liked what you saw, and subscribe to stay connected with our ongoing exploration.